Here are the crypto top headlines covered in this video. SEC hit with sanctions for its gross abuse of power in debt box case. Next, spot Bitcoin ETFs hit negative flows as GBTC sheds $642 million in a day. Also, Fidelity amends spot Ethereum ETF proposal to include staking. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, SEC hit with sanctions for its gross abuse of power in debt box case. The SEC initially conceded it misled the court but argued a sanction wasn't appropriate. A United States District Court has imposed sanctions on the Securities and Exchange Commission for acting in bad faith in a lawsuit it brought against Debtbox. The SEC initially filed a motion to dismiss without prejudice, but that was denied by Judge Robert J. Shelby, who slammed the regulator for intentionally lying to the court about evidence it obtained to secure a temporary restraining order, or TRO, and freeze of Debtbox's assets last August. The Commission's above-discussed conduct constitutes a gross abuse of power entrusted to it by Congress and substantially undermined the integrity of these proceedings and the judicial process, Shelby said in the March 18th filing. The critical evidence the SEC offered to have obtained lacked any basis, which was nonetheless advanced in deliberately false and misleading ways, Shelby explained. The bad faith inextricable from the abusive conduct and a sanction of attorneys' fees and costs for all expenses resulting from that conduct is appropriate, said Shelby. In its August lawsuit, the SEC claimed Debtbox perpetrated a $50 million fraudulent cryptocurrency scheme amid its operations as a software mining license provider. In requesting the TRO and asset freeze, the regulator claimed Debtbox had already sent $720,000 overseas and would flee to the United Arab Emirates and secretly transfer more assets with it if it was notified of the order. The request was initially approved, however, Shelby later reviewed his initial order and concluded the SEC misrepresented evidence and that the $720,000 transfer was instead sent within the United States. In December, Judge Shelby gave the SEC a show cause order, a type of court order that requires a party to justify, explain, or prove something to the court. While the SEC accepted its actions weren't forthcoming, the regulator argued a sanction wasn't appropriate. Shelby took aim at SEC attorney Michael Welsh for misleading the court and attempting to obfuscate. Welsh knew his statement from the TRO hearing was incorrect. Rather than correcting the misstatement, he and the Commission attempted to subtly shift the language to gloss over and perpetuate the misconduct. Austin Campbell, founder of Zero Knowledge Consulting, said the SEC staff involved should be terminated and that the agency needs to undergo a reform. SEC lawyers should have personal liability for such conduct, in addition to the agency itself. What is described here is unconscionable for those entrusted with such authority by law. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, spot Bitcoin ETFs hit negative flows as GBTC sheds $642 million in a day. Grayscale's GBTC has just notched its largest day of outflows since its launch, though ETF analysts are optimistic that BTC ETFs are only just starting to gain momentum. More than $640 million worth of Bitcoin flowed out of crypto asset manager Grayscale's spot Bitcoin exchange traded fund on March 18th, marking the largest day of outflows for the fund since its conversion to a spot ETF on January 11th. Grayscale notched a total of $642.5 million in outflows on March 18th. At the same time, inflows into Fidelity's Bitcoin ETF, the second largest fund, stumbled to just $5.9 million, its lowest day on record, according to data from Farside Investors. Both led to a net outflow for spot Bitcoin ETFs of $154.3 million. At the time of publication, the price of Bitcoin is trading at $65,875, down 10.5% from its latest all-time high of $73,797, which it notched on March 14th per CoinGecko data. Several market commentators have pointed to slowing Bitcoin ETF flows, the upcoming halving event, and the United States Federal Reserve's Federal Open Market Committee meeting on March 20th as justifications for BTC's depressed price action over the last few days. However, other analysts have shared an optimistic outlook for Bitcoin ETF flows moving forward. Grant Engelbart, Vice President of investment firm Carson Group, told Bloomberg TV that only a handful of his firm's advisors had seen clients allocate funds to Bitcoin ETFs, noting that of that allocation, there had been an average investment ratio of 3.5% of total funds. Commenting on the interview on X, Bloomberg ETF analyst Eric Balchunas said that the interview aligned with what he had been hearing from Bitcoin ETF fund issuers, that only a handful of early adopters had been picking up a meaningful allocation to spot Bitcoin ETFs. So far, it's only ones into BTC already. They are a handful of early adopters inquiring, then making allocations, Balchunas said. Advisors are not yet soliciting the rest of their clients. All these flows are from inbound traffic, added Balchunas, hinting that Bitcoin ETF inflows could continue to gather steam in the future. Other commentators pointed to the remaining amount of Bitcoin on GBTC's books, roughly 370,000 BTC, as justification for a long-term bullish outlook on ETF flows. GBTC had 378,000 Bitcoin and today sold 9.6K Bitcoin. Good news is that they cannot go on with this pace for so long, wrote crypto market commentator Alessandro Ottavia in a March 19th post to X. Grayscale Bitcoin Trust was converted from an institutional fund to a spot ETF on January 11th, alongside the approval of 9 other spot Bitcoin ETFs from fund issuers, including BlackRock and Fidelity. Our next top headline: Fidelity amends spot Ethereum ETF proposal to include staking. The price of LDO jumped briefly after an updated spot Ether ETF application from Fidelity, which proposed to stake a portion of the fund's ETH to generate additional income. Financial services giant Fidelity is seeking permission to stake a portion of the Ether held by its proposed spot Ether exchange-traded fund to provide investors with additional income. In a 19B-4 amendment filed to the United States Securities and Exchange Commission on March 18th, Fidelity wrote that if the ETF were to be approved, the fund would stake an undisclosed amount of its assets through one or more trusted staking providers. The sponsor may, from time to time, stake a portion of the fund's assets through one or more trusted staking providers, which may include an affiliate of the sponsor or staking providers, wrote Fidelity in its amended application. Fidelity did not disclose a specific staking provider. There are several Ether staking providers in the market today, including Lido, DAO, Rocket Pool, and Stakewise. The price of Lido DAO, the largest liquid Ethereum staking provider, briefly jumped 6% from $2.48 to $2.56 on the news before falling back to $2.49 per TradingView data. However, Lido DAO has fallen 27% in the last week amid a wider pullback for Ether and many of the tokens within its ecosystem. Fidelity is one of 8 fund issuers to have lodged an Ether ETF application, currently awaiting approval by the SEC. On February 8th, ARK21 Shares also added plans to stake a portion of its proposed fund's ETH. Days later, Franklin Templeton entered the spot Ether ETF race, also with the intention to stake a portion of the ETF's Ether to produce additional income. It entered the running on November 18th last year and is joined by other firms including the world's largest investment firm, BlackRock, Cathie Wood's ARK Invest, and crypto asset manager Grayscale. If the SEC does not approve all 8 ETFs by Van Eck's final deadline on May 23rd, the entire roster of prospective issuers will have to refile their applications at a later date. Bloomberg ETF analyst Eric Balchunas said the likelihood of a spot Ether ETF approval by Van Eck's deadline in May was sitting at just 35%. In January, Balchunas pegged the odds of approval at 70%, but told Cointelegraph the SEC's radio silence to prospective fund issuers and political blowback against Chair Gary Gensler were bad signs for the approval process. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.